What's up, everybody? Today we're diving deep into an ETF that can help you build long-term wealth. Schwab U.S. Dividend Equity ETF, ticker symbol SCHD. This bad boy is like the all-star team of dividend stocks packed with companies known for their stability and, you guessed it, juicy dividends. We're talking about titans in tech, behemoths in consumer goods, and innovators in healthcare, all under one roof. If you only watch one video today, make sure you watch this one all the way till the end, because by the time we're done, you'll know exactly why SCHD deserves a spot in your portfolio. But before we get started, hit the like button. Let's get 1,000 likes on this one, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Today's video is sponsored by my good friends at 𝗗𝗚𝗏𝗧, the best stocks analysis software I use in finding these incredible stocks. More on that later. Now, let me start off by breaking down what SCHD is all about. See, this isn't your average run-of-the-mill ETF. This thing is built for the long haul, focusing on companies with a proven track record of paying out dividends like clockwork. We're talking about companies that are not only leaders in their industries, but are also dedicated to sharing their profits with investors like you and me. And trust me, when you see the names on this list, you'll know we're dealing with the heavy hitters of the market. Think about it. When a company consistently pays dividends, it's a signal. It's them saying, hey, we're doing well, we're profitable, and we're sharing the wealth. And that, my friends, is the kind of stability and long-term growth potential we're looking for. So buckle up because we're about to take a deep dive into the world of SCHD, exploring what makes it tick and why this ETF should be on your radar. Trust me, by the end of this video, you'll be adding SCHD to your watch list faster than you can say dividend growth. Let's get into it. 2025 has kicked off with a whirlwind of volatility for growth and tech stocks. While some names have soared to impressive gains, others, like 𝗗𝗏𝗏𝗏 and Palantir, have taken a nosedive, losing up to 25% of their value. This wild fluctuation highlights just how fragile market sentiment can be. Inflation concerns, the looming threat of tariffs, and stretched valuations have investors on edge, making this a perfect time to get back to basics. For those looking to stabilize their portfolios and hedge against market turbulence, the Schwab U.S. Dividend Equity ETF deserves a serious look. Now, why is SCHD such a strong pick? It offers a solid combination of defensive positioning, a diversified portfolio, and a highly attractive 3.5% dividend yield. And let's not forget, it's a low-cost fund with an expense ratio of just 0.06%. Analysts on Wall Street are generally optimistic, giving it a moderate buy rating and expecting double-digit upside in the next 12 months. When it comes to long-term returns, SCHD has consistently delivered. Over the past year, it has gained 13%. Over 3 years, it's up 21%. And in the last 5 years, a staggering 95% return. But it gets even better. Over the past decade, SCHD has posted a return of 189%, proving itself as a reliable performer in both bull and bear markets. So, what's SCHD's strategy? The ETF tracks the Dow Jones U.S. Dividend 100 Index, focusing on high-quality companies with sustainable dividend payouts. With nearly $70 billion in assets under management, it's one of the most popular ETFs in the market. SCHD's 100 stock portfolio includes some of the most well-established names across multiple industries. Its top 10 holdings, accounting for nearly 43% of the fund, include consumer staples like Coca-Cola and Pepsi, healthcare powerhouses like AbbVie, Amgen, and Pfizer, as well as dividend-paying tech stocks like Cisco and Texas Instruments. One of the key advantages of SCHD is its valuation. While the S&P 500 is trading at nearly 26 times earnings, SCHD's portfolio is significantly cheaper, just 17 times earnings. That means SCHD is about one-third less expensive than the broader market, making it an appealing option for value-conscious investors. And since it primarily holds blue-chip stocks, it avoids the extreme volatility often seen in high-growth tech names. Beyond price stability, SCHD is also a powerhouse when it comes to dividend growth. The ETF currently yields an impressive 3.5% annually, which is nearly triple the S&P 500's 1.3% yield. Even more importantly, SCHD has increased its dividend payout for 13 consecutive years, an incredible streak that highlights the fund's reliability. And let's not forget about its ultra-low 0.06% expense ratio. To put that into perspective, if you invest $10,000 in SCHD, you'll only pay $6 in annual fees. Over 5 years, assuming a 5% return, That cost barely adds up to $34, making it one of the most cost-efficient ETFs out there. In terms of overall performance, SCHD has consistently delivered strong returns. As of January 31st, its 5-year annualized return stands at 11.9%, while its 10-year annualized return is 11.6%. Now, when compared to the broader S&P 500, represented by the Vanguard S&P 500 ETF, which posted annualized returns of 15.11% over 5 years and 13.7% over 10 years, SCHD has slightly underperformed. However, in a more challenging market environment, SCHD's defensive positioning and lower valuation could help it outperform the broader index. So, is SCHD a buy, sell, or hold? Wall Street analysts lean bullish with a moderate buy rating based on 55 buy recommendations, 43 holds, and just 2 sell ratings in the past 3 months. With an average price target of $31.38, that implies an upside potential of over 11% from current levels. Among the stocks in SCHD with the highest potential for gains are Guess, Leggett & Platt, and Apacorp. On the flip side, names like Hershey, Bank of Hawaii, Paychex, and Altria are considered the riskiest bets within the fund. Now, let me give you a closer look at some of the great companies that make up the SCHD ETF. First on our list, we have a semiconductor giant Texas Instruments, better known by its ticker symbol TXN. Now, these guys are all about analog and embedded processing chips, which might sound a bit technical, but trust me, it's big business. We're talking about the brains behind everything from cars and industrial machines to personal electronics and communication systems. Basically, if it's got a circuit board, chances are Texas Instruments has something to do with it. But here's why I'm bullish on TXN. They've got a laser-like focus on long-term growth and profitability. And that translates into a dividend history that's as consistent as a Swiss watch. They've been increasing their dividend for years, and with a payout ratio that's well within a comfortable range, I'm confident they can keep those dividends flowing for years to come. And that, my friends, is the kind of company you want in your corner for the long haul. Now let's switch gears and talk about a company that needs no introduction. PepsiCo, trading under the ticker symbol PEP. This beverage and snack food giant is a household name for a reason. From their iconic sodas to their Frito-Lay snacks, Quaker Oats products, and even Gatorade, PepsiCo has a product portfolio that's as diversified as it gets. And that diversification is a key strength in my book. But here's what really makes PepsiCo a dividend superstar: their incredible track record of dividend growth. We're talking about decades of consecutive annual dividend increases. That's right, decades. They've been through recessions, market crashes, and everything in between, and they've still managed to increase their dividend year after year. That's the kind of consistency and reliability that income investors dream of. Next up, we have a company that's literally in the business of delivering United Parcel Service, better known as UPS, trading under the ticker symbol UPS. Now, in a world where e-commerce is king, UPS is the logistics powerhouse that keeps the packages moving. They've got a global network of planes, trucks, and warehouses that would make even Amazon jealous. And with the continued growth of online shopping, UPS is well positioned to capitalize on that trend. But here's what makes UPS a dividend champion: their commitment to rewarding shareholders. They've been paying dividends for decades and have a solid track record of dividend growth. And with a payout ratio that's manageable, I'm confident they can continue to increase their dividend for years to come. So if you're looking for a company that's built for the long haul and pays you to own it, UPS is definitely worth a closer look. Next on our list, we have a tech giant that's been connecting the world for decades: Cisco Systems, trading under the ticker symbol CSQ. Now, Cisco is a leader in networking equipment and software, and they're behind the infrastructure that powers the internet as we know it. We're talking about routers, switches, cybersecurity solutions, and all sorts of other tech wizardry that keeps businesses and individuals connected. And in a world that's becoming increasingly reliant on technology, Cisco is a company that's well positioned for continued growth. But here's why CSCO is a dividend gem. They've been steadily increasing their dividend for years, and their payout ratio suggests they've got plenty of room to keep those dividends growing. They're committed to returning value to shareholders, and their dividend history is a testament to that commitment. So, if you're looking for a tech stock that pays you to own it, Cisco Systems is definitely worth considering. Now let's talk about a biotechnology pioneer, Amgen, trading under the ticker symbol AMGN. This company is a leader in developing innovative medicines for serious illnesses, and they've got a pipeline of promising drugs that could change the face of healthcare. We're talking about treatments for cancer, cardiovascular disease, inflammatory diseases, and more. And with a focus on cutting-edge research and development, Amgen is constantly pushing the boundaries of what's possible in medicine. But here's why AMGN is a dividend powerhouse. They've been consistently increasing their dividend for years, and their payout ratio suggests they've got plenty of room to keep those dividends growing. They're committed to rewarding shareholders, and their dividend history is a testament to that commitment. So, if you're looking for a biotech stock that pays you to own it, Amgen is definitely worth considering. Now let's talk about a biopharmaceutical giant, AbbVie, trading under the ticker symbol ABBV. This company is a leader in developing and commercializing innovative therapies for some of the world's most challenging diseases, including immunology, oncology, neuroscience, and virology. We're talking about life-changing treatments that are making a real difference in the lives of patients around the world. And with a robust pipeline of promising drug candidates, AbbVie is well-positioned for continued growth. But here's why ABBV is a dividend powerhouse. They've been consistently increasing their dividend for years, and their payout ratio suggests they've got plenty of room to keep those dividends growing. They're committed to rewarding shareholders, and their dividend history is a testament to that commitment. So, if you're looking for a biopharmaceutical stock that pays you to own it, AbbVie is definitely worth considering. So there you have it, folks, a deep dive into the SCHD ETF and the dividend-paying powerhouses it holds. All things considered, SCHD is a rock-solid investment for long-term investors looking to navigate an increasingly volatile market. Its portfolio of blue-chip, dividend-paying stocks provides a steady income stream, while its low valuation and cost-effectiveness make it an attractive alternative to overpriced growth stocks. If you're looking for stability, solid dividends, and a diversified portfolio backed by strong fundamentals, SCHD is a smart bet. And while tech stocks continue their unpredictable swings, it may be wise to hedge your portfolio with a reliable, income-generating ETF like this one. Remember, building wealth takes time, and SCHD is all about consistent, long-term growth and a steady stream of passive income. If you want to take your investing to the next level, Forecaster is the ultimate tool I trust to find incredible stocks like these. Don't wait, try it for free today. Just click the link in the description with my code, Galore10, for an exclusive 10% discount. Now I want to hear from you what you think of SCHD ETF. Are you bullish on it? Let me know in the comments below. And if you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Don't forget to smash that like button, share this video with your fellow investors, and subscribe to the channel for more game-changing investing insights. Until next time, happy investing.